Sometimes it's the story that...
All right, glad to have you back. This is Business Nigeria. My colleague Effiong Ekop is live in the studio. The market is in red. Today's Thursday, and we're wrapping up the month of September. What do you make of this?
It is the balancing of transactions that has brought back this, and again, profit-taking. In the last 2 weeks, market prices have gone very, very high, and the banks, especially those ones that had completed their recapitalization exercises, they brought, their most of activities. Investors reacted to them, and we saw prices of those stocks. They started moving, talking in terms of FCMB, Fidelity. Then even First Bank had impressed investors very seriously in the last 2 weeks. And so those people who had a strategic mind, they positioned just to take a piece of the high prices that they had on the average. And that's depressed index today. That index is down 0.47%. The total volume of trade that we've recorded, 346 million units of shares, valued over 6 billion naira. That's reasonable. And we've seen that the banks are still taking attention from investors. First Bank is very, very top there. Zenith Bank, then GT Holdings. So you can understand that the big banks, they are not giving up. They are ready to, very well to go places. And even with the preparation of UBA to join the fray, then the game will be up.
All right, then. So let's look forward. What's your outlook going forward?
Outlook is just mixed trading. It will be up and it will be down. We are preparing for the last quarter of the year. I believe that from mid-October, we shall see stock prices basically looking up, till November, and then we'll be in the frenzy in the month of December. But all of this will happen on the back of availability of investable funds. It may be easily available to those private houses like insurance companies, the banks, discount houses, but individuals and households are the people that are complaining very seriously because of the impact of high rates of inflation that we are going through now.
Amos, thank you so much for your time, Effiong.
Thank you, Tolu.
All right. Well, outside our shores, Asian stocks bucked the global trend to extend the China-led rally today, fueled by persistent optimism over the country's aggressive stimulus package and news that more support will be in the works. In the broader market, equities in Asia got an additional boost after China's leaders pledged to support struggling economy through forceful interest rate cuts and adjustments to fiscal and monetary policies, among other things. Now, Chinese stocks extended their gains on the back of announcement that the CSI 300 blue chip index last up 1.9%. The Shanghai Composite Index advanced 1.62%. The CSI Mainland Real Estate Index jumped 5% as Beijing also said it would make efforts to pull the real estate sector out of its slump. Hong Kong Hang Seng Open New Tab rose 3%, while Hang Seng Mainland Properties Index surged 9%. The propelled MSCI's broadest index of Asian Pacific shares outside Japan to a 2-year high, with the index last up 1.5%. Japan's Nikkei similarly rode the wave of buying and gained 2.5%. Features pointed to strong open in Europe, with Euro Stock 50 features adding 0.67%. FTSE features gained 0.43%. S&P 500 features added 0.55%. Nasdaq features jumped 1%. Labour members have formally passed a motion calling for the winter fuel payment cut for pensioners to be reversed. The motion was put forward by Sharon Graham, the General Secretary of the Unite Union. She opened the debate criticizing Prime Minister Starmer for removing the allowance while leaving the super rich untouched. The defeat came as a blow to Downing Street. The Prime Minister and his ministerial team had repeatedly said throughout the party conference that the move demonstrated that they could be trusted with taxpayers' money.
Homes, and they built a national health service on the back of crisis. There wasn't a story of tightening belts or making some of the poorest in our society pay. Friends, people simply do not understand. I do not understand how our new Labour government can cut the winter fuel allowance for pensioners and leave the super rich untouched. This is not what people voted for. It's the wrong decision and it needs to be reversed.
It was the same story on everything. Energy security, the housing crisis, telling people they're tough on crime without building enough prison places, fixing your attention on those issues, not on growth, technology, climate change, public services, the ageing population, the cost of living crisis, or any of the challenges that this country desperately needed to face up to.
The International Monetary Fund has approved the $7 billion representing a 5.2 billion euros loan to cash-strapped Pakistan. The country is due to receive the first $1 billion tranche, which is of the loan, with a balance to be paid over the next 3 years. Prime Minister Shehbaz Sharif welcomed the decision and thanked the head of IMF, Christina Georgieva, and her team. Pakistan has taken more than 20 loans from IMF since 1958 and is currently its fifth largest debtor. IMF said that the program will require sound policies and reforms to stabilize and help make the economy more resilient. The South Asian nation has pledged that it would be the last loan from international lender. As part of the deal, Islamabad agreed to a number of unpopular measures, including increasing the amount of tax it collects from people and businesses. IMF approved the $3 billion bailout for Pakistan in July 2023. It also received funds from allies in Saudi Arabia and United Arab Emirates. All the time, Mr. Sharif said that the bailout was a major step forward, the effort to stabilize the economy. And wrapping up the show now, crude oil prices are mixed today. U.S. West Texas Intermediate crude sells for $68.57 with a downward price margin of 1.61%. Brent also has a margin of 1.62% downward to sell at $72.27. Bonny Light sells at $78.62 with a downward price margin of 2.84%. And Bonny Light sells for $78.62 with a margin of 2.84%. OPEC basket dealers are offering $75.12 with an uptick of 0.91%. Well, that's our show today. Thank you so much for being a part of it. I'll see you tomorrow, same time. Get busy, make some cash. Easy does it.